Good evening, traders. It's March 24th. My name is Michael Rabinowitz, and I am from MR Strategies. And I wanted to introduce myself yet again. I'm just beginning to provide this new analysis, which is something I've been using for years as a trading strategy, something I shared uh, with this platform for about 5 years as a moderator in this pro trading room. And there'll be five keys that I like to share with any trader, new and or veteran. And the five words that I like to use, somewhat my mantra, is patience, providing you opportunity to execute, establish consistency, and develop success. And those keys, and I usually just symbolize that by whether you say OPEX, OPECS, or POECS. In any event, those are keys that I like to use. Patience, by far and away, is the single most important thing as a trader, and it's important to have a game plan. And the best way to have a game plan is to spend a little extra time taking a look at the charts, because you'd be amazed with just a little bit of work how much information it reveals. And I'm talking about the most basic of things of technical analysis. Trend lines are simple, and a few of the things that I use and I emphasize to all the traders and in my approach towards trading are the moving averages and the trading levels, the intraday trading levels, the daily pivots and resistance, and your support levels, and to see how important price reacts to these areas and the expectation for some type of reaction, a reversal, a continuation. At the end of the day, you can look at a chart and take all of this off. And I talked about this before. It's just a bunch of lines, and you look at it and you're like, well, look, they stopped here and they sold off, and they stopped, and I sit here to make it look like a piece of cake. But at the end of the day, if you really look at this, there are significant reasons why they're stopping at these areas. All right. And listen, we don't know where the market's going to stop on either direction, on the upside or the downside. But sometimes just having a little bit of this information puts you one step closer to being prepared. And that's a good start for all traders. So let's take a really quick look at what developed over the last few days. And I just could consider these the last 2 or 3 days are just classic gap fills. And I talk about that all the time. They gap higher and they have a tendency to roll over at some point. They'll fight it. Sometimes they might not. Sometimes they'll take a few days. I think that had a gap that last week that came all the way on to around 38.95, and we spent most of the time in the mid 39s. And in fact, you can take a look here at a 15, and we've been in a trading range, and it's pretty much been 39.50 to about 38.70. And we keep testing at the boundaries. And you can see the wedge I developed here in the 15. These simple trend lines, technical analysis 101. And these are coming from the upper resistance band is coming from the contract highs. And this one's off a low. I think it's a yearly low that this bottom of the channel is forming on the bottom line of this trend line. But more importantly, take a look at how well this market has traded to these locations, which I emphasize. And let's take a look at today, for example. And this developed early. This was before the opening, but this was a heads up. This came in. Oh, actually, bear with me. Once again, I have not properly set this chart up, so bear with me for 15 seconds here. Let me get to the opening so you can see exactly. And once again, always remember what is the state of the market. Now, this thing has been a bull trend and it's been accelerating, but it's been having retracements. And I don't know if we're getting a corrective to it, if we're going to establish any type of significant correction, because every time they roll them over, they find a way to ram them back up because they're looking for the value. And if it's lower and it's significant location for the bigs, they're going to buy it up and vice versa. So here's a quick look. at this morning, and this is before the opening bell, and look where all this movement took place from. And this is why I emphasize the levels, because you're going to get the highest probability trade with the least amount of risk. There's risk in every trade you make, but at the end of the day, if you're taking them from the key spots, you're going to see significant success, and a lot more than what you do from middle of the range locations or the random scalper or trend trader. I mean, I like to leverage from these locations. You don't have to trade this way. Whatever works for you. I emphasize this because I believe this provides the greatest rewards. So you can see early in the morning, they kicked right out of the bell. Look at this triple bottom that started off right at the daily pivot. All right, and right after opening bell, they gave it to you. This is a beautiful reversal buy. This is one of my more significant trading strategies. It punches through the location and reverses. Look, it did it here, provided a great buy, came back down to it, reversed again, and it came back down a third time and gave it. And this, and it's once again patterns repeating themselves. I talk about this all the time, and I will say it again. The market has an uncanny ability of repeating patterns. That's why I say do a little homework, take a look at the highs and lows, box them in, do what you got to do. But at the end of the day, just take just a little memory to some of these areas. So you got the long early reversal buy. They rammed them up to about 39.24, and this is the resistance area. Look at these trend lines in here. This is going to be an area you got to pay attention to. What is price going to do up here? Are they going to find the buyers to kick it and blow it out and maybe make a run for the contract highs? Or are they going to fail like it has all week? I mean, in fact, look at this. It just failed all week. Oh, this was a lower opening, and they just rammed it. So once again, this is providing you. It's this is a wedge. This is the channel, and right away, right there, your first short. Well, it kind of stopped up here. This is just an overrun bot. This is a no man's location. Not sure. I would have been taking advantage of this one, but once again, you know, you're looking for the most probable successful trades, and ones that are probably going to be the least risky. And the location trades are the ones you want to target. All right, bull market, sell off, chop, chop, another reversal, and another buying opportunity. All right, and then again, 39.21, and I'm pretty sure I talked about this area on a couple occasions previously. This has been a struggle location. Once again, market's pushing, and it can't get going. So it's early in the morning. It's trying to find itself, but it's holding structure, and that was the key to the early part of today's session, and it provided the buys from the pivot. If there was no other location at all and you took this trade, you were golden all day. The reversal buy from the daily pivot. But this is where the day starts to get really interesting, and this is where your homework pays off. Look at this high right here. I got the arrow right there. I got the rectangle box, an extended move. All right, where's your expectations up here? To me, prove it. Why? We'll take a look at this little high. That is the top. That's the trend line. It's the top of the channel. You're going to need to prove to me that you're ready to go the extra yard and rally this market. Well, you just rallied 20 handles already. So ideally, it's probably going to retrace a little bit. They're going to take a little profit. It turned out to be the turning point, and it's a key location. All right, it fell a little short of R1. I would have preferred it to punch through the price and then reverse, but at the end of the day, it's significant because it's resistance. I know it. It's there. My chart's showing it. And the interday and your platforms, every platform is going to be a little different, but at the end of the day, it all depends on your own specific platform. But being ready for these areas puts you puts you in a good position to be successful and to catch these trades in the right locations. And there was the turn. And look at this. They tried multiple times to come back up, and they couldn't do it. It chopped its way back down. And once again, we're going to stop right here at 39.15. I think this is a big number, and we're going to have to remember this location later later in the afternoon because it was a turning point for the second half of the day. But that was the bounce that got us back up. They kind of chopped around. You can see here they're starting to top. Look at that. They keep banging off this resistance line, banging off, banging off. They can't advance. They just can't advance. Okay, to me, these are signals of short opportunities. The market's just running out of steam. They can't get going. There was a short opportunity right there, 39.23 or better to the downside. And look at that move. All right. And then they tried one time to punch through. They couldn't. Once again, I'm a little more familiar. I helped design these charts, so I'm a little familiar with this platform. And usually this ribbon tells me a lot, all right, and how price reacts to that ribbon. What failures into it. It means a continuation of that trend, and vice versa. And once again, this time they pushed harder through the pivot, but yet again, they found support around down here at 39.04, and here was the heads up. But then again, once again, what are your expectations after a 20-point break? Again, the market has to prove itself that they're going to slam it. And look what they did. And this is more a part of this particular platform, a red to blue change as opposed to a yellow and a moderate reversal. This is a strong sign that the buyers are coming in here, and this provided a nice buy to the pivot. It chopped around back then, but it rolled over again and provided actually a pivot short. Probably one I would not have taken because the market was holding strong pretty well. And look at this, a double bottom. This was a trade you absolutely have to take. This one I could understand, hesitant to a new trader who's not familiar, to a more seasoned trader would take advantage of it. But this is a double bottom opportunity in a bull market. And here you go. Look at the results of this one. They made a low of 39.04 and they rallied 13 handles. And then once again, I mentioned this location, this 39.17 area, and you're going to see what this did. And I actually have my arrows here because this was the turning point to the day. And this is when they told you, see, because you could see here how early morning, we held the pivot and ran, and now we're under the pivot, but they're still trying to bounce. But this right here was the sign for the day. And take a look at this. They couldn't. They stalled at their moving averages, which means all that positive momentum that carried the early morning session is about to change and change dramatically. And what a surprise, another power rollover. I don't know what came out this afternoon. Once again, the market is showing me signs of fatigue. It's having a hard time holding those higher highs, and they're testing the lower end of the wedge. So we're just going to have to see how this plays out. But this was a beautiful double top short opportunity at the moving averages, somewhere in here around 39.14 or better, 13 or better. Two handle stop, you're golden. Look at that breakdown. And it just pretty much changed the course of the day. And here was the end of the show. Right here. They tried right in here to hold it back up. 39.04, somewhere in that ballpark. You can see bottom of the wedge. And that was it. They couldn't. They double topped at '06, which I think is this one right here. And that was another short opportunity if you're playing a trend to the downside, which is how I would play it because I understand what price is telling me here via the moving averages. Once again, when you're above it, the price has a tendency to accelerate, and it's going to meander around it, and it's going to test it, and then eventually it's going to make a decision. And here was a turning point, which I talked about, and a 39.17 double top at the moving averages. They rolled. They tried a couple times to jump off this pivot or this trend line down here, the lower part of the channel, and they failed at the moving averages. And then they broke the dam and eventually rolled over and made significant lows, took out S1, and then they just chopped around. So I think this market is trying to tell us something. I usually pay attention to these trends, whether or not it's got overall meaning and we're going to establish a more corrective move to the downside. We're still in a bull trend. We're correcting. We continue to push to the highs. We're running out of steam. But once we get to the lower end of it, they seem to keep holding it up. So I think 38.70 is going to be a big number. I would want to pay attention to that location. You can see the pivots coming in at 3,900. That's where this thing kind of busted out in the second half of the day. That'll be a key level tomorrow. You're going to want to watch that. The daily pivot is always a big number if it comes in play. It's the midpoint of a session's resistance and support levels, areas that I think are super important to your trading that will totally benefit you guys if you're paying attention to it. So we're going to have to see how this plays out tomorrow. But yet again, basic homework, just a little bit of homework, and you're going to be amazed the type of information you're going to get out of it. You are going to have a better game plan to kick in your trading day. And once again, I emphasize patience because, when we're down here, you know, depending on how you're going to want to play it, you gotta, you're going to want to really focus on what the market is doing at its extremities, right there and right here. All right, and they held this lower part of it. The daily pivot was right here. You kept providing powerful buys. Actually, it was a little lower than this. I take it back. Oh, I got the wrong trading session. My apologies. But at the end of the day, this is our session right here. So that was a 31 high, and there's your little congestion into that 3900 area. And I think that's an area you want to pay attention tomorrow. So once again, this is MR Strategies. My name is Mike Rabinowitz. And, if you guys want to know, I have a little more detailed information about how I do this and how I come about my strategies and what I utilize. I'm giving you guys the basics of it. There's a little more. I provide much more detailed analysis in terms of types of strategy you can play within the market structure, whether it's a bull trend, a bear trend, neutral, acceleration, correction. There's opportunities. Like the whole concept of what I'm trying to share is that there's opportunities from both sides of the market. You don't always, you're in a bull market, and we always want the opportunity to get long, but sometimes they put you against the wall by gapping higher, and then they make it so challenging when they're hitting resistance levels. It's tough, and that's when they usually take advantage of the retail trader because people seem to jump on the bandwagon and not pay close attention to what's really happening. Because price is going to fluctuate, it's going to get a little overvalued, and the sellers are going to come in, and it's going to get undervalued, and the buyers are going to come in, and that's basically my approach towards price and my execution. But I'm patient and I like to wait, and then I have a game plan that I utilize every day, and I think it's something that can help all traders. So, but once again, MLBINO at AOL.com. Feel free to ask questions, inquire, and I'd be glad to get back to you and share any input I can or help you out any way I can moving forward. Have a great night, everybody. Take care.